subscribe to our YouTube channel VanFin Multibaggers and press the bell icon to see the latest updates and videos. VanFin, discover opportunities, create wealth.
Software has rallied about 15% so far this year and has gained almost 67% in the last 12 months. The stock is currently seeing muted moves today, but what have been the key factors that have contributed to the positive moves over the longer run, and what are the growth prospects for the company? To answer all of this, joining us on the show is Chief Financial Officer Prasanna Oak. Good morning and thank you very much for joining us, sir. Just wanted to start off, with a recap of the third quarter numbers, sir, where we did see some positive surprise coming in with respect to the international IT services vertical, which saw a 300 basis points expansion in the margins. Can we continue to see this kind of expansion on this vertical at least?
Yeah, Shraddha, thank you. We had a good quarter in the last quarter. Our business is split into two parts, as you talked about the international services, where we grew sequential quarter about 3% and close to about 24% in the dollar terms. And our domestic business, we again grew both on the top line and bottom line. We believe that as we have the growth and we continue to have traction in our clients, we should carry on the momentum. We hope to carry on the momentum even on the top line and the bottom line. I think one of the key differentiators for us has been that our offering of digital transformation via platformation is finding traction with the clients. And it's a concept which has been started by Sonata, and we're doing this with the existing clients and with new clients too, and including both the Indian business and the offshore business or the on-site business.
Right, Mr. Oak, when you talk about this particular quarter's numbers, we have seen a substantial gain, even on a sequential basis when it comes to your revenues. However, there's been a sharp surge in purchase of stock in trade. How do you explain this rise? Is this on account of some large deals that you've signed and that you needed, some more inputs coming in, or what else does it explain?
Yeah, so as we talked about, there are two separate lines of businesses, and we've got a domestic business also. So, when you are seeing this sharp jump in the revenues, it was actually on account of a deferred deal, which slipped from Q2 to Q3. And that's the reason why our Q2 numbers on the top line were slightly depressed. That came back in Q3. And but this business, the domestic business, what we call as the one that we are doing in India, we typically do not look at the top lines at all. We look at it in terms of absolute margins, and that's where we have seen a growth, because it could so happen that you have a large deal with a small margin, and we are essentially looking at the EBITDA and the PAT on this business in absolute terms, and that has continued to grow.
So your top 10 clients contribute close to 70% of your revenues. If you could just talk about the efforts that you're making at Sonata to bring down this client concentration risk, and what can this ratio really look like or fall to over the next, say, 3 years by 2020?
Yeah, good question. I mean, we often get asked that question on the international side of the business, top 10 contributing about 70%. What we are doing is that we continue to add new clients with our offerings. I think year till date, we've added roughly about 15 to 20 new clients in the first 3 quarters. So the objective is that as each of these clients starts to build momentum and each of them moves towards becoming $1 billion, actually moving towards $1 million account by itself, we believe that this ratio will change. The ratio has not changed because we are also seeing our existing clients grow as fast, right? So it's in a way, it's a good thing also. But we believe that as we add clients and quantum of revenues or the average revenues per new client increases, we could see this ratio moving towards about 60% or so from the top 10 in the next 3-4 years.
Right, Mr. Oak, so let's talk about some of your intellectual properties, that you deployed. Can you tell us a little more about the traction in something like a Resopia or Brick and Click, which I believe, and if I understand correctly, contributes to well over 15% of your revenues?
Oh, absolutely. I mean, great question. So what we've been doing over the last 3-4 years, is to invest in our IPs, and to this end, we developed nearly 3 to 4 of these IPs ourselves in-house, and we did about 3 acquisitions. Resopia, Halosys, ASCS came because of that. And so if you look, the IP-led revenues, as you rightly said, contribute about 15%. The more important thing is that we are converting this into platforms. So Resopia is actually moving into a travel platform. ASCS would be a modern distributor platform. Break and Click would be moving towards a complete retail platform. So this is going back to the strategy that we've applied, is that when everyone talks about digital transformation, we are doing this, the digital transformation for our clients by partnering with them and doing through a concept of platformation. This is proprietary to Sonata. We use our own technology and methodology and frameworks to enable a client to move his business towards becoming a digital business. And all these 6 IPs and the platforms associated with that, with them, are finding traction with clients who say that the need of the hour is to make our business more digital, more platform-based business, which offers them an ability to scale up the business, have it working on the platform. And we're using this, and we use it through 3 concepts. Sonata Ready, wherein the customer buys the platforms based on the IPs that we've created. Sonata Accelerate, where we work with some of the large platform players in the world to create platforms for our clients. And then if a client wants it customized, we call it Sonata Custom. So all these IPs and associate platforms with them are actually playing a very key role in the discussions that we are having with the client. So it's a better form of digital transformation for the clients.
Right, so a word on your clients who have the need for infrastructure management services. What is their view right now? Is there still delay in decision making? Because we have seen that in a lot of your other peers. Are you also facing that? Is there a delay?
Yeah, if you look at infrastructure management, I think it's broadly encompasses a number of things, which includes the cloud, and we're trying to move this also towards platform, the entire platform for digital infrastructure. So it comes with a variety of offerings that Sonata has begun to offer, which include security, license management, includes moving to the cloud, and so we are not really seeing there's a delay in decision making. But I think the client is looking at more value that he can get from the entire set of offerings on his infrastructure management, and we have tuned our offerings to be able to offer that. So yeah, I mean, in short, we are not really seeing that. We continue to reach out to the client with a broader set of offerings on infrastructure management, the licenses, and the host of services around it.
All right, Mr. Oak, we leave it at that. Thanks for joining us and giving us an update on the